On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray De Niro, and we are back at it again for another Bag Talk episode. Now, I've been taking feedback. Got down in the comments. Heard what you said. You want more focused content, more strategic content, more usable content. I get it. Which worked perfectly because the last episode I did was pretty focused, and there were some things that I wanted to talk about, and there were some things I wanted to break down, and it prompted this series of Bag Talk episodes, which is going to be building your financial structure. Now, I promised that I would do the first one. This might be a little bit out of order, but it's a concept that I find very important that a lot of people just aren't understanding, that aren't doing, because it's new. People just don't do new stuff, but I do. That's the reason I named this channel Future Financial Strategies, because I like to be on the bleeding edge to see what works and what doesn't. So, without further ado, we're going to jump right into it. But before we do that, I want to make sure that you guys like the video on the way in. Secondly, if you've been here more than twice, especially, go ahead and subscribe. Don't ghost watch me. Go ahead and subscribe. And last but not least, share the video. These videos, this series for sure, going to be worth sharing. If you did not share my blue collar playbook, you need to go back and watch that. Definitely worth sharing, and it spawned this whole deal because I'm going to do breakdowns on every single part of that. And we're starting off with the financial flywheel. Now, all these pieces go together to build your financial structure. Each piece is important, including the flywheel. Now, for those of you who follow the Dave Ramsey, all the dated plans of just saving up money in the bank and you sit in cash and all the dry powder, you might not want to watch this. But if you've been doing that and realizing that, hey, unless I get a 50% raise every single year, I can't buy anything. Unless I get a 20% raise every single year, I can barely buy food in a few years. Those of you who are feeling the effects of inflation, the effects of the rigged system that is working against you, those of you that understand what's actually going on, those of you that look at your paycheck, and when you get to the grocery store, even though the Fed says everything is fine, the amount of groceries you're getting is dwindling every paycheck because your pay's not going up enough to facilitate the amount of groceries you're getting. This is for you. This is the beginning of a wonderful journey to get your finances in order to be able to compete in the system. Does that mean the system should stay the way that it is? Absolutely not. But you shouldn't starve while we fight to change it. That's kind of where I'm stepping in. We're not starving. So let's go ahead and jump on into it. The first thing we're going to do is I'm going to break this down. Now, this concept is not something that is mine. It is something that was given to us by a genius by the name of Michael Saylor, owner of MicroStrategy Strategy in its current iteration, formerly known as MicroStrategy. It's what he's done to build his company up. And I'm going to break down what he has done and why strategy has performed so well. And for those of you who do not understand what's going on here, is strategy used to be 82 cents. Now, granted, it's sitting at the hundreds now and getting beat up because Bitcoin's currently down. But when it goes up, they've already done a stock split at $1,000. They're probably going to be doing a few more of them because the nature of the business. Now, what I'm going to explain is what Michael Saylor refers to as his flywheel leveraged play. Because what he's done is he converted his company into a Bitcoin holding treasury company that now issues digital credit. And we're going to take this concept that he uses for his business, that he's used to blow up the value, the shareholder value, the Bitcoin per share of his business for him and his shareholders. And I'm going to disseminate that down to how you can replicate this exact same strategy in your personal financial situation. Doing couple little tweaks here and there and looking at how we use money differently. Let's jump right into it. The core idea of this strategy is pretty simple. What they've done is created a self-reinforcing cycle by using its balance sheet and stock as tools to accumulate Bitcoin. Now, I'm going to go through each mechanism of this flywheel, and then I'm going to give you the secret sauce on how I am using that in my personal financial situation to replicate the exact same thing. Even as I am paying down debt, even as I am navigating through the same financial situations as you guys are, even as I am not making as much money as most of you guys are, at least per the internet, because everybody makes six figures on the internet. So I'm just going to break this down on what I'm doing to grow my net worth and why, even though I make less than you, I might be worth more than you, or I'm catching up on you at a faster clip than what you think should be possible, and how I'm living a life that is supposed to be impossible per all the financial gurus. Because if you're not making $20 bazillion a year, you ain't got no money. And I'm like, cool, I ain't got no money. Then that's fine. I ain't got no money. So we're going to go with the first. We're going to go ahead and jump right on into it. The first thing that they do is issue equity or debt. Now, what do? That means that they either sell shares of their stock, which creates more shares, sells into the market, and they get money that way, which they then use to buy Bitcoin. Now, I'm going to actually pause there. I am obviously of the mind that all roads lead to Bitcoin at this point. I function on a Bitcoin standard, so this for me is kind of same thing. It's easy to do the same thing. This made sense. Now, you can do this with any medium. You could do this with gold. You could do this with stocks. You could do this with your brokerage account. And actually, with the income that I make, I am having to do this with my brokerage account to then generate enough income to replace my W-2 income, because unfortunately, I do not sit at a desk all day. I am a skilled trades person, and which is for me half blue collar, half IT. But it's a very physical job. It burns your body out, and I don't want to give my body to the machine. So these situations are different. Once you find your medium and your thesis and your standard, now do I use as much as I can to get amplified Bitcoin exposure or buy Bitcoin? Absolutely. Have I tweaked this to where I am getting Bitcoin exposure? I am generating income off Bitcoin as well, because that's something I believe in. Yes. That said, you can apply this to anything. Do not think that you have to do this with Bitcoin. It just works with Bitcoin because the math is there. The compound annual growth rate for Bitcoin is there to facilitate this, which is the reason that I say all roads lead to Bitcoin, because having Bitcoin as your hurdle rate, it makes a bunch of other stuff just not worth investing in at that point, because it's like, I'm not going to get the same return. I'm not going to get ahead doing this. But for those of you who are smart, I mean, you might have something else, but this tool, this strategy can be used to accumulate anything. It doesn't have to be Bitcoin. So they issue shares, they sell shares. Now, we as individuals do not have shares of a company to sell, so we can't issue equity. But we do have the ability to tap into debt. So just go ahead and earmark that. Because the stock trades at a premium to the value of the Bitcoin share, the NAV, issuing shares brings in more dollars than the proportion of Bitcoin it's backed by, which gives them the ability to buy more Bitcoin. So that's one of the levers. We have access to the debt part. You can't issue equity unless you have a business that's publicly traded. Then, by all means you can. But for us as the everyday peasant, we do have access to debt. The next step in the flywheel is use the proceeds to buy Bitcoin. Now, this could be Bitcoin. This could be any other asset you want. For me personally, it's high yield dividends, little bit of Bitcoin, little bit of, actually a lot of bit of high yield dividends, little bit of Bitcoin, little bit of amplified Bitcoin exposure. We're building up the long-term holding portfolio, and that's pretty much it right now. Pretty simple. Raise money, buy Bitcoin. Then the third part is price appreciation of Bitcoin. You're riding that wave up. You're working with that 25+% compound annual growth rate that Bitcoin has. And the NAV growth for the stock that you have now issued. Now, we don't have stock. We don't have stock. But buying the Bitcoin with debt, if the Bitcoin's outgrowing the debt, then you have the ability to grow your financial basis indefinitely. Now, it's moving on to the next step, that is going to be the stock premium and investor demand. So the stock sells at a premium. It sells it a little bit more than what it's actually worth. A lot of stocks on the stock market sell at premiums. That's the reason everybody says everything's overvalued. You're paying too much for that. Granted, stuff keeps going up in value because we're deflating the currency. So like it's a question of who's right at that point. Is the stock overvalued? Possibly. Stocks sell at a premium. I mean, that actually isn't a possibility. It's like, these are all the assets the company has. They are given X amount over that for the stock price, which gives them a little bit of wiggle room to spend some more money to purchase assets. And then number 5, easier, cheaper future capital raises. As this flywheel works, they're growing, which means that the next time they go to borrow money, it's easier to buy money. They borrow money. They get better terms. In the future, as this continues to work, the money for them gets less and less expensive. So now they're taking the broken fiat that's just getting made up out of thin air. They're using it to buy Bitcoin, which is the strongest digital asset on the planet, and then riding the compound annual growth rate of Bitcoin to then borrow more worthless fiat to buy more Bitcoin at better terms. Pretty awesome. This strategy has 3 main pillars that he has set up that help him, navigate through these waters. First off, you got to have a firm belief in Bitcoin, or in our case, as the everyday layperson, me personally, strong belief in Bitcoin, but you, whatever you're using as the basis of what you're buying. People in real estate been doing this for ad infinitum. We're using other people's money, OPM. You go buy real estate, rinse and repeat. They never told you could potentially do this with stocks. Now, with stocks, you're probably not going to have the OPM option, but again, we have access to debt, and we're going to go into those. I'm actually going to leave you guys with 3 tools and concepts so that you can kind of wrap your head around where these things work out, where you can go to get started. So we've got the belief in Bitcoin. Next is the ongoing accumulation of Bitcoin, which from the stock perspective would be Bitcoin yield. From our perspective, it's whatever asset you're purchasing. For me, it is Bitcoin. It's Bitcoin accumulation or amplified Bitcoin accumulation, the ever expanding collateral base, if you would. Number 3, you have access to cheap capital. Now, as a publicly traded company, they have access to dirt cheap capital. But a few of the tools that we have that I'm going to show you are cheap. I mean, it's relatively cheap, it's not bad. It's not bad. And like, you can do the math on that. If you're getting, if you're getting a compound annual growth rate, and I'm giving poor numbers now, like this is worst case scenario, you're getting a compound annual growth rate of 20%. Anything under 20% at that point is cheap capital. You can work the spread on that. Just something to keep in mind. And so cheap capital, the ability to tap markets for lower cost debt, convertible preferreds, or high premium equity so that Bitcoin's expected return comfortably exceeds financing costs. We as individual peasants do have tools at our disposal to be able to do that. It's just you use them to go on vacation. You use them to buy new rims. You use them to impress people that don't care about you with things that are going to lose value. We're going to talk about that. Other one up there. I actually have 4 things for you. Now, the last thing on this coverage that we're going to do on the breakdown of this flywheel is, obviously it's not all pie in the sky. We got to talk about why it can work and when it fails. Oh, yeah. Oh, there's a possibility. Yeah, there's a possibility of failure for everything. This isn't financial advice. This is what I'm doing with my money, but I'm sharing with you my concept, my strategy. And maybe if it works for you or you can apply it to your financial situation, maybe you can make some headway. Maybe you can get to freedom. Who knows? It's important to understand the failure option, because like my money, this is all my money. This is all the wealth that I have is tied up in these things. And to sit there and be like, oh, well, there's no possibility of failure. Like there's a possibility of failure for literally everything. Everything. So I'm not a hopium person. I'm not a pie in the sky person. I look at what's happened. I look at my experience having been in the Bitcoin space for over a decade, having been through 3 of these cycles. I see it. I've seen it a few times. And my own personal experience of the stuff that I've accomplished since being in the Bitcoin space, the way that I look at money. So let's go on. In a strong or steady Bitcoin bull market, the flywheel can dramatically amplify your Bitcoin gains, specifically for the equity holders. But for those of us, the peasants, it's going to grow your wealth because you've been doing all this work to grow your wealth. Like that is one of the things that is important, is acquiring the Bitcoin in and of itself for us. Just like it's important for MicroStrategy, they're acquiring it for their shareholders. We have to acquire it for ourselves. No one's coming to save us. Where it can fail, in a deep, prolonged Bitcoin bear market, the same leverage and expectations can turn against the company. The NAV drops. Now, we're not a publicly traded company. We're individual peasants. The downside for MicroStrategy is not necessarily the downside for us. The downside for us as individuals, and this is somebody who is running this play right now with his personal finance. I'll tell you what the downside is. You don't have the capital to sustain the loans, to sustain the leverage. That's where the danger is, which is why I believe in tasteful leveraging. I don't leverage to the hilt. I don't completely leverage my accounts. I use a minimal amount so that I'm not at risk of literally blowing up my financial structure and having to liquidate everything to pay back debt because I'm under duress during the bear market. It's a matter of if you have the income coming in. Now, we'll talk about how you can self-perpetuate these flywheels. That is definitely part of building the financial structure. But first, let's go ahead and take a look at some of the options that we have. And I'm going to start with the easiest ones. So this is going to get to a scale of complexity, and we'll talk about the risk rewards. So the first one that we're going to bring to the peer view, for those of you that are watching, I'm not going to make myself a micro machine. I'm going to make myself a medium machine, and we'll add that to the stage. There we go. I'm over off to the side. First one we're going to talk about is, wrong one. First one we're going to talk about is Cash App. This is super simple. I like Cash App because of the opportunities it gives. Cash App gives you access to a borrow function, which you can see here on the screen. It scrolled up and showed it. And I love it. I absolutely love it. Let's see here. Is there deposit pay? Oh, come on. It doesn't give you that. That's weird. Cash App card. Oh. Oh no. Oh, that's cool. Hold on. I'm scrolling down. I want to get to the borrow part. It doesn't have that up there. So they did not specifically list this, but it's something that Cash App gives to you. Now it has tiers, so you have to get it and use Cash App. Like you got to start putting money in here. So there is that to get it started. But when I started with Cash App, it would give you like $25 a week, and I would just, or not $25 a week. It would have a $25 borrow function on there, and I just started using it. Like I'd put a little bit of money on Cash App every paycheck, every 2 weeks. And I've built it up to basically I have between 1,900 and, or I'd say $800 and $1,000, because if you stop using the borrow function, they start like pulling back how much money you have access to, whatever. But what they'll do is they'll give you money for 5 weeks. That's 5 weeks. So it's a little over a month. And as you pay it back and as you build up a reputation with them, they'll keep raising it. So mine started off at $25 and I just borrow it all the time and just pay it back every 2 weeks because I get paid. Be like, cool, pay it back. I take the money, go buy a little bit of Bitcoin, which you can buy within Cash App also, or go buy stocks, whatever. I built that up super easy. And then, it got up to the point to where it was $1,000. Right now it's at 900 because I stopped using it for a little bit while I was reorganizing my financial structure, but I've recently brought it back into the lexicon of tools that I'm using. And so it's given me access to $900 at a clip. And yeah, that's a flywheel because you get it at a flat 5%. Do you owe it back in 5 weeks? Yes. But if you, again, for us as peasants, we have to have income coming in to manage our existence anyway. We're not a business. So like this isn't like a long tail. I get to pay them a dividend, whatever. This is the easiest access because they don't do a credit check. It's based on relationship history and like they have certain metrics of how much money you have in there, whatever. But it's access to cheap capital. A flat 5% is cheap capital. Now, for the razzle dazzle of what I personally do is every time I take any type of loan or draw a margin, I take 10% of the bulk amount and I buy Bitcoin with it at the very beginning before I spend it on anything else. That 10% comes off the top. We're buying some Bitcoin. Also a flywheel type mechanism. And then you pay the loan back. You have access. Now, the other thing that I do personally at my income level, because I don't make as much as most of you, is my first stop for most of my income goes straight into my high yield dividend play to get income to pay back and facilitate these loans. Risk there, the income not being enough. That's the reason I didn't quit my job as soon as I quit my job, because technically I can pay all my bills now. The income is inconsistent. So I have to overshoot my current income now to be able to not have to go to work. The deal is I can do that faster. And then once I'm out of the workforce, these flywheels will be self-perpetuating because when I borrow money, put it into an income generating asset, pay back the loan with the income generated from the asset, after the loan's paid back in 5 weeks, I still have the thing that generated the income to pay this loan back. That's the magic here. And then I have the backstop of I'm still going to work. So if I needed to, I can just pay the loan back. That's the magic here. So this is the easiest one to get access to. If you don't have credit, get on Cash App and start building this up. There is not another platform that I have seen that has this mechanism on it, which is why I'm such an advocate for Cash App. I think it's great for someone who knows how to use these things. I'm not borrowing the money to go buy sneakers. I'm not borrowing the money to go finance Chipotle. I'm borrowing the money to build up my asset base. These things are a double-edged sword. If you are financially responsible, this could change your life and streamline what you're doing and make it so that you get to freedom faster. If you are financially irresponsible, you're just going to be nosebleed in debt and having problems. Period. Dave Ramsey plan is for you. You just got to get rich slow, and you'll have a few years when you finally are able to retire at whatever age they allow you with your cash. And, you can go on a couple of cruises and then, die. Like, that's fine. But for those of you who are disciplined enough or are willing to be disciplined enough to fast track this and put your nose to the gridiron, these are the things that make it so that you don't have to grind your face into the ground immediately. The way we look at money, the way we use debt over here in the wolf pack is different. We are not part of the crowd. We are not average in anything. So this is the easiest way to start. This is probably the first flywheel most of you will get access to. Was for me as well, because the next flywheel, I didn't realize some of the stuff you could do with it. So the next one that I'm going to show you is Citibank. It's credit cards. You can use credit cards to get cash directly into your account. Now, me specifically, I have the Citi Double Cash Reward Card, because you get paid when you buy something, you get paid when you sell something, or when you pay off the thing that you purchased, when you pay the card off, which is cool. It was a simple card. It was one of my earlier credit cards. And one of the things that they do probably every quarter, or whenever I pay my balance down, one of the two, they send me out these checks. And they have two options. You can either have a longer term at like just under a 1% interest rate, or you can have 0% for like 12 months. When I do these, and I used to just throw them away because I didn't understand what they did. And then I found out that you could just write the check to yourself, and then you get cash in your bank account from your credit card. Now, there is a finance charge, but even if you're getting 1%, if Bitcoin is giving, in a poor scenario, 20%, that's a 19% spread for the time that you hold that debt. Now, as it sits right now, what I'm currently doing is cycling my debt to keep it at 0% positions and as low interest positions as I can. So that way I can speed up paying down the debt because I have so much of it. But again, when I do these debt cycles, I'm taking 10%, specifically when I get something that I'm doing it out of cash, which for the Citi cards, my Citibank account, I write myself a check for, well, this time around, it's going to be $18,000. 1,800 of it, I'm going to take 1,000. I'm going to buy Bitcoin. I'm going to take 800 of it. I'm going to buy amplified Bitcoin. Just what it is. Like, that's what I'm going to do. And then I'm going to pay back because they'll have like an upfront finance charge because nothing's free. They're going to make their money off you, and they make good money off me because I use these to buy assets most of the time. They're going to get like 5%. So you got 6% the first year because you're paying the 5% up front. And I normally, when I make my first payment on it, this is one of the hacks that I've got for myself, especially since I'm cycling it, because like I don't want to add that finance charge to the debt pool. I pay that up front. So my first payment and then the finance charge up front. So that way it's out of the way. So that's out of the pool now. And then, so that first year, you've got the 5% up front and 1%. That's 6%. In a horrible scenario, Bitcoin's 20% compound annual growth rate, 14% arbitrage. 14%, that's better than what you're going to get in the S&P. Your little ETF that you're paying for isn't going to do that well. Plus, I'm buying additional Bitcoin, so I'm getting that also. And then I'm also buying amplified Bitcoin. So I'm getting that also. So as this compounds, as you use these flywheels, the numbers start getting pretty nice. And since I'm also, once the debt's paid off, I'll be able to utilize these flywheels to just buy income, which will then pay back the loans. Again, that's where the magic is for us, the working class, people who don't have a publicly traded company, but we do have options. This is one of the reasons I believe you should have good credit, because that's why they give me these things, because I have good credit. Build your credit up. So that's tier 2. Tier 3 is going to be Robinhood. This was the one that I accidentally pulled up first. Now, what's the reason for Robinhood? Specifically, it's this Robinhood Gold membership. $5 a month. Pretty awesome. And the reason is I don't use the high yield. Well, I mean, I don't keep cash in my deal. I don't use the cash because I don't keep cash sitting in my account. I don't believe in that, because 3.35%, I keep mine in STRC. You get 11.5%. Like, that's crazy. Like, why would I want to have cash sitting in my brokerage? That's nuts. The retirement boost, for those of you that use retirement accounts, they give you a 3% match on IRA contributions applied automatically to your retirement savings. That's pretty awesome. Instant bigger deposits. You have the access. This gives you the ability to have, when you deposit, because it takes Robinhood an obnoxiously long time to clear, which is, it's kind of weird. I don't like it. My Schwab clears super fast, but this is, they say Robinhood's not a big boy account. I think that it has the ability. I think it's a great wealth account. But the clearing on getting money into your brokerage is annoying. So this gives you instant access to those funds. Management fee cap. I don't let them manage any of my stuff, so that doesn't affect me. But for those of you who are more set and forget, that could help you. Lower fees. Obviously, you get the codex. They also have home loans. Hold on there. The credit card is amazing. It is my daily. It's getting ready to go back to my daily driver. I had a little hiccup with that when we first went through, but we're getting ready to do the step cycle. So like we're doing that. And then they also have private banking services. The main thing that I use this for, and the reason I am putting this on here as one of the flywheels, is if you are a gold member, the margin on your brokerage account. Now, mind you, I live out of my brokerage account over on Schwab. And people are going to ask me quite like, why didn't you move? And I was like, I was over there. I'm lazy, bro. Like, let's be honest. It's just what it is. So the Robinhood account that I have, I am a gold member. I specifically to use the gold credit card, but one of the hacks that you get on Robinhood is the first $1,000 of margin that you have is interest free, 0% on $1,000. So you have an immediate $1,000 draw that's free. It's free money. That's 0% money. As a flywheel, that is an amazing hack, which is the reason we're getting ready to drop. After we get our minimums and our long-term holdings for our amplified Bitcoin exposure, we're setting up another Bitcoin focused portfolio. I'm converting, and I've already started this process. I'm converting my Bitcoin, my Robinhood portfolio over to something akin to the blue collar playbook that we dropped last week on Thursday. So if you haven't watched that, you might want to check out that video, so that way when we start doing the Robinhood updates again, you can get dialed in and understand what's going on and the ideology behind what we're doing, which I'll explain it again, but just so you kind of have a heads up. Specifically to get access to that flywheel, because then I can take $1,000 in cash, semi-regularly and work that, and there's no interest on it. So I can let that pay back slow if I want to. So that's another one. Your brokerage account, just in general, you get, I would say, anywhere between 8 and 13% generally. Is about where that sits regularly. So again, Bitcoin making 20% CAGR, that's 10% arbitrage out of your brokerage account. And one of the kickers about the brokerage account is if you're in an income portfolio like mine is, I don't actually pay that much in interest fees for living out of my brokerage account because the balance is constantly fluctuating because I constantly have money coming in every week and I have a paycheck coming into it every 2 weeks. And even though I'm dipping in and out of that margin, so I'm not getting dinged on interest every single day. That's another one. So the last is the most complicated one that we've got. And that's going to be actually leveraging your Bitcoin in and of itself. So a platform like Strike, there are a few others. I personally like Strike. I am Team America. I am invested in Jack Mallers. And this platform actually goes out of their way to not liquidate people, which is kind of nice also. The one caveat is, and this is specifically where I live, and if I would either be waiting for this is the reason this is last on the list, or I would be looking into finding another option that allowed you to leverage your Bitcoin in a way that you could get cash into your bank account. But leveraging your Bitcoin is another one because you don't want to sell your assets. If you can leverage the asset, you don't have to pay taxes. You don't pay taxes on loan money. It's another important thing to understand. You can add to your income base without having to pay taxes on the money if you do it via debt. Just so you know, like that's another hack that wealthy people have. They don't live in the same world. They don't look at money the same, which is the reason I say regularly, I'm like, you're buying something that you're looking to sell for a profit later. I'm buying collateral. All I need is collateral. And then you can start generating your own income and being self-sustaining because that's the goal. Strike requires you to have the loan minimums they have for the big loans are, and there are looking at having a credit instrument as well, but that doesn't do as much for me unless it allows you to pull out small amounts of cash. And I'm not sure that they're going to do that when they release it. I will do an update probably on Strike itself. So that way I can let you guys know if I can actually get the cash out of it in small increments into my bank account. Because if I can, that's going to be a game changer as well. But the way that it sits right now, you have to have basically $20,000 in here because they give you a 50% loan to value ratio. And you can borrow $10,000. Now, the $10,000 mark, that's a good demarcation point for me. I like $10,000. I can factor in $1,000 a month, pay it back in 10 months. You get 12, but I pay it back in 10. That's what I do. Or, so you have to wait until that's released in your state because when I first got on Strike, it was not released in the state that I live in. It was like you had to borrow like $100,000. It was like $100,000, or no, it was $75,000. And I was like, which meant you had to have $150,000 in there to even be able to use it. I was like, that's kind of crazy. But I didn't have $20,000 in Bitcoin that I was willing to put on this platform because I refused to go below the 1 Bitcoin threshold that I have in cold storage. So I just started stacking a little bit Bitcoin at a time. I've got about $6,000 sitting on the platform right now, which means I got 14,000 to go before I'm at 20. But we're buying during the bear market, so we might catch it on the upswing. What this does is it gives you an additional flywheel. So we've gone through 4 flywheels of varying degrees where you can kind of write your own checks and make up money. Now, for me, one of the key things that I believe people have to do that companies don't is we have to figure out a way to manage these flywheels, which means you have to have a consistent income coming in. And me personally, I don't want to be reliant on W-2, but for high income earners, it might not matter. You might just be able to crank all these flywheels to just buy Bitcoin, or to just buy whatever asset you choose. And then you make so much money that it's not that big a deal for you to be able to pay these all off in 10 months or in 5 weeks for the Cash App. 12 months for the city. Robinhood can sit there indefinitely depending on how much margin you have and what the growth is on your portfolio. You know, like these are some things that I wanted to put out there. There are things that I'm doing, and there are things that as we're doing these monthly updates, because I do my portfolio breakdown where I show all the receipts on that. I give you guys my numbers from my financial recap for the months every month. As you're seeing the portfolio, the net worth, the income, all these things grow, it's not just me functioning off my W-2 income. I don't make enough money to do that. I couldn't have gotten to where I'm currently at if that's what I was doing. Like, I need that additional jet fuel. And thank goodness for the ability to look at somebody running a strategy and running a playbook and being able to break that down to my situation and be like, hey, can I do that? Is there a way for me to do that? And I figured it out. So I'm leaving the gems for you. I'm leaving the breadcrumbs. We too can do what the big guys are doing. It's just people look and they go, oh, these guys on the top of the mountain, they're cheating. I can't do that. It's not fair. Like, you can't do exactly what they did. You didn't build a publicly traded company, but you do have access to debt tools. You do have financial flywheels that we can all crank ourselves to help accelerate us getting out of the rat race, being able to make an actual difference, being able to have the income to actually be able to help people and your families, being able to pass down the knowledge to your families to change your guys' financial futures, to change our financial future. Somebody has to be the catalyst. Somebody has to make the sacrifice, and someone has to do the work. Stop blaming other people and stop expecting other people to come save you, and start saving yourselves. We're going to close out on that for this episode. It's your boy, Reckless Ray De Niro, leaving you more gems, having another great bag talk episode. The channel's future financial strategies. And until next week, I'm out. Peace.
Money on my mind. Yeah. Focus, got no time for games. Nah. I don't blame it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.